Welcome back, everyone. I hope you enjoyed your coffee break and you are more than ready and excited to talk about blockchains, tokenization, institutional adoption, all that fun stuff. I'm Jacqueline Melinek. I'm going to be the one moderating this conversation, and joining me today is Pearl from Matter Labs, Nick from Solana, and Morgan from Ava Labs. I'm excited to have them all on here today because they all come from very different ecosystems. To start off, as the title suggests, I want to hone in on the word adoption. I feel like we are constantly using it, throwing it around out there, and I think mainly inside the Web3 space, but then also outside of it. So for each of you to lay the land, when you think about adoption of tokenization from an institutional perspective, what does that really mean to you today?
I can go first. So I think in terms of institutional adoption, what we've seen today so far, especially as it relates to traditional institutions adopting blockchain and tokenization technology, it's really been mostly concentrated among asset managers who've been interested in issuing and tokenizing kind of their suite of assets on chain, mostly for crypto native businesses. And so the direct kind of view of that is, there's 200 billion of stablecoin market cap on chain today. Let's see if we can convert some of that into kind of our suite of assets, starting with money market funds. And then the idea would be to go further out the risk and duration spectrum. I think what we would love to see from an institutional adoption standpoint is really asset managers starting to provide liquidity and actually being the buyers of these tokenized assets. We'd love to see kind of banks, traditional banks and broker-dealers offering custodial capabilities for tokenized assets, SEC lending, secondary market trading, and really kind of growing out the suite of institutional capabilities and utility, which I know has been talked a lot about today. And then ultimately seeing various types of platforms, RIA channels, traditional wealth platforms, ultimately offering tokenized assets to their clients who in turn, most likely of which are off-chain today. So we're at the beginning, but I think ultimately when we mean by adoption, we really want to see institutional capital kind of being provided in the space.
So when I think about adoption, I think about product market fit, and I'm going to answer the question a little bit differently. What has TradFi really found attractive in our broad ecosystem? Clearly, they have found Bitcoin attractive. If you look at IBIT, BlackRock's Bitcoin ETF, it's the most successful financial product in the history of all time. So clearly there is demand to take digital assets and wrap them in ETPs, ETFs, et cetera, and I think we're going to see more and more of that. And then on the other side, I think stablecoins are the clearest case of product market fit on the blockchain. As Morgan mentioned, there's nearly $200 billion of stablecoins on chain, and I think something in the order of magnitude of 1/10 of that or less of more traditional RWA on chain. So clearly, that is where there's the clearest adoption.
Yeah, I mean, in general, like you also said, we're still far off. We do see that more and more institutions either are studying it or are trying to test it, and we get more and more people also really understanding what it's about, and they see what the blockchains are of the advantages are of blockchain tech. But we see also players wanting to be part of this story for wrong reasons, I would say, just to get like a piece of an ever-shrinking pie, which is the Web3 users, Web3 companies, but instead, it should be the other way around, right? Also, what Meltem said in the previous panel, this we don't see enough yet. We don't see enough like real use cases yet where they actually leverage the benefits of blockchain and try to get new users on chain without them even knowing it. So providing the right UX, having them experiment with the advantages of it without actually realizing that they are using an on-chain tech and that they don't have to sign 3 times to do a swap, for example. That should also be part of the past. And I think we're getting there with better UX and better offerings, better integration with legacy systems, but there's still a long way to go.
Mm-hmm. I do agree that it has to be extracted away. Otherwise, it's not going to be accessible, especially for institutions. Like, they already have enough complexities in their existing systems, right? Nick, you also brought up stable coins as something that is like a clear use case. And I think a lot of people in the audience would probably agree with you on that. How do you see that playing into institutional adoption? Like, what do they want to do with stable coins that they can't just already do with dollars?
Well, stablecoins provide a great settlement rail. It allows folks to buy any asset in any denomination and settle it against a stablecoin, and I think that's a pretty powerful use case. There's, of course, also the payments use case for stablecoins, which we're seeing both in terms of cross-border payments, remittances, and the like, and increasingly even potentially, enterprise stablecoin utilization for things like repo markets and intraday liquidity. And so I think it's all very exciting. The thing that I worry about is the fragmentation of stablecoins. I think as banks get the green light from the current U.S. administration, they're all going to be looking to have their own, bring their tokens, to the market. Whether that's, JPM coin or something like that. I think each bank is going to want to bring their own version of their stablecoin, tokenized deposits in a stablecoin, and I think we need to solve for liquidity.
Mm-hmm. Yeah, I also think on the flip side, there's probably things that they don't want. What are some of the things that they're like, please no more of this, or we've been pitched this so many times, we don't see a purpose in this? And do you see that as like, okay, maybe they need to be better educated on this, or they have a fair point when they're saying we don't want X, Y, Z, or whatever it is?
So I think we've not come to the point yet where, especially banks, aren't necessarily making the connection of how tokenized assets could be improving the product, services, and capabilities to their existing customer base. So they necessarily haven't made that leap of how do we, to your guys' point, abstract away the complexities but offer incrementally new capabilities, whether that's like more efficient SEC lending or peer-to-peer transfers or providing liquidity into an AMM pool. Like these are the things that I feel like should be talking about and thinking about and speaking about them in the business terms, the implications, but they haven't necessarily made the leap yet of offering these assets to their traditional and embedded client base, and instead are still very much thinking, how do we offer this to net new customers and crypto natives? So I think once that kind of leap happens, we'll start seeing much greater kind of adoption inflows. But again, to your guys' point, it really needs to be abstracted away.
But just to hone in a little bit on that, on banks going on chain and offering these things to their clients, it's sometimes a bit of a paradox, right? Everyone is into crypto. They say crypto is financial freedom. We want to cut out all the middlemen. We want to do it ourselves. But reality is we're still a very small community of people actually doing stuff on chain and being familiar with how these things work and how crypto works. And most people, in my opinion, will not be okay with self-custodizing. I would always want to have this trusted middleman that they can blame someone if something goes wrong with their assets, someone who actually gives them the right advice and gives them this sense of security, right? So I think that will still be the world we will go towards, that some will self-custodize, some will always want to have a trusted middleman. And banks are actually in the perfect position, I think, to bridge TradFi and DeFi. They're the ones who can do the onboarding of billions. They have the infrastructure, they have the regulatory trust, they have experience with compliance. They're also the ones that can then offer tokenized real-world assets directly to their clients, the existing products, but also offer new products to their clients that they didn't have before. They're also perfectly equipped to create very efficient on-chain lending markets, make them completely decentralized and accessible to their clients once again, so they can actually decide for themselves what they want to borrow against. And yeah, I think lastly would be still the whole KYC part. I don't think that will ever really fall away. The fact that someone actually needs to make sure that they're properly KYC'd, and also that someone has done due diligence on investments, that someone is there to give advice in case of need.
Mm-hmm. Nick, I see you nodding. What's your thoughts? Just agreement?
What's the question? I mean, is the question, are banks going to be the ones that lead us to the promised land? I would say I would disagree with that.
Hey, I didn't ask that.
Okay.
If banks would lead us to I guess it's more like, what don't they want? When you're having conversations from the foundation at Solana.
The banks don't want crypto.
So how do we change their minds on that?
Gasless relayers. I mean, so one of the things that's been hard is there was SAB 121, which made it virtually impossible, and Operation Choke Point, and Choke Point 2.0, which basically made it impossible for banks to hold any crypto on their balance sheet at all. Now, those have kind of gone away, but we don't know exactly what the rules of engagement are because there's no legislation that tells them what they can do. We just knew what they couldn't do, and now we know that they maybe can do those things that they couldn't do. But until they get very clear green light with legislation, I think that they're going to take a very cautious approach to this and still not really mess with crypto. And so to use any blockchain, you need the underlying gas token, right? Like to use Ethereum, you need ETH. And so I think one thing that banks would rather not have to deal with is crypto at all. So to the extent that you can make that automatically disappear for them and they can use the blockchains without having to hold crypto for themselves, for their customers, fine. Custody is a great business. But for themselves, I think they would rather not.
Well, just to go further a bit on this, I didn't say crypto, I said digital assets. It's not the same thing. So I agree with that. Banks will not want to touch crypto, and they shouldn't have to touch crypto. So they should just be able to have their own chain or be on a chain that is private for them, permissioned for them, and that they do not have to hold any ETH to. I agree with that 100%. They should just have their tokenized deposit or their stable coin as they see fit and have some, like you said, gas stations in between to do that for them. But 100% agree with you on that one.
We're in violent agreement.
In terms of tokenization, then, I want to talk more about that. Pearl, I know before we previously discussed that maybe not everything needs to be tokenized. Maybe everything can be, free markets, sure, but can you kind of discuss where do you see the bigger purpose in this and why you feel that way as well?
Yeah,
Sorry, I'm outing you.
No, I did say that, and I still stand by it. I think just tokenizing a money market fund for the sake of tokenizing it and for marketing.
It looks good, though.
Yeah, it looks great all on paper, but what is the benefit? Like if my bank offers me right now a money market fund or on chain, what is the difference for me? Why would I make it sometimes more complicated, sometimes even more expensive by going on chain? There's no real point unless you actually give the users a purpose for holding it. Can I use it as collateral and borrow against it myself without having to ask someone for permission? That's interesting. But just for all these companies now to say, oh, Biddle did something amazing, we got 1 billion AUM, we will also put a money market fund on chain and we will ask the Web3 companies to invest, but we don't have users that are interested, we don't have a distribution strategy. There's no point. And I'm also not supporting that use case.
Yeah. What do you two think?
Agreed. But I also do think sometimes we kind of take for granted the accessibility question around, especially around dollar-based savings accounts, euro-based savings accounts. I think a lot of the partners that we're working with take very much a kind of B2B2C approach to go-to-market and distribution, and in turn are working with companies who are offering dollar-based savings accounts, for example, powered by whether it's money market funds or stable coins to investors, customers who don't necessarily have ready access to dollars or to dollar-based savings accounts. So fully agree with Pearl in that there needs to be a very concrete utility or accessibility compared to what someone, whether it's an institutional or an individual, can access via the traditional system. And so that definitely needs to be the case. But I think what we're finding is, especially on the stablecoin front, interest to adopt the technology in the back end among neobanks, wealth tech platforms, embedded finance platforms, who in turn have distribution and who are offering differentiated products and services, leveraging kind of tokenization in the back end.
Building on what Morgan said, one of the things we're doing to kind of put in practice a real-world use case for these tokenized money funds is, in the ordinary course of all three of our businesses, we probably give grants to teams all over the world that may not have access, certainly to the dollar, and may also not have access even to interest-bearing bank accounts in their local markets, depending on how the organization is structured. And so we're now giving grantees of the Solana Foundation an option to, this is through Franklin Templeton's Benji token, elect to receive their grant in Benji. So it essentially serves as their on-chain interest-bearing bank account, not a bank, right? but dollarized, natively interest-bearing, and there's no hacking risk because it's a security that can be kind of seized and freezed or, you know, what have you. So it's a kind of a nice safety feature as well.
Mm-hmm. Morgan, you talked about real utility, which I think is something that we would all love to see. And I know at Avalanche, there's been a lot of announcements alongside institutions. In terms of creating value, what are you kind of seeing on that front? And where would you like to see Avalanche and the broader institutional adoption kind of like grow and flourish?
I feel like there's a lot of questions in there.
That's what I do best. I throw like 5
All the
questions in
things.
one, and you got to pick.
Well, so I think, I mean, ultimately, we're definitely vying for adoption as it relates to everything that I mentioned in the first instance. I think to Pearl's point, there's a lot of times that projects are vying for and fighting over like the same 5 users of crypto of which we are 4. It's like, why don't we work with companies who in turn have distribution to ultimately bring off-chain liquidity and off-chain capital on-chain by nature of offering really compelling products and services with a slick UI and a UX. And that's going to be the thing that I think you know, will ultimately see greater quote-unquote adoption from a tokenization standpoint. So from an Avalanche perspective, we're very much focused on cultivating an ecosystem of builders who are like-minded in that way, who have very much either a B2B or a B2B2C kind of go-to-market and are ultimately vying for real-world adoption, whether it's in institutional finance, which is where I'm focused, whether it's DeFi, gaming, enterprise, whatever it is, but that's kind of the overarching goal.
Mm-hmm. How does Solana and Matter Labs look at this?
Well, I think there's a lot of things that you know, Solana wants to be when it grows up, but one of the things we talk about a lot is this idea of internet capital markets. So, you know, can we help provide the technological infrastructure to support a financial everything store at NASDAQ speed, where you can take any asset, immediately trade it for any other asset, fundraise on the technology platform, and, you know, kind of be a one-stop Wall Street shop, you know, for all of your on-chain and kind of traditional financial needs. So that's one thing. The second thing is this idea that we call PayFi. So it's the idea that you can take those financial assets and use them in the ordinary course of your life, whether you receive them, like I was saying, you know, as you know, payment, or for your wages, or use them in commerce. This idea of, you know, taking your phone with your on-chain wallet and using what's in it, you know, without ever having to worry about moving money, taking, you know, your bank account, moving it to pay your bills, pay your credit card, using this, using that account, you know, having everything in one place, I think is a really powerful vision that we, I think, are getting closer and closer to.
Yeah, maybe I should also explain Matter Labs. They're core contributors to ZKSync. I didn't say that before, but we also have the ZK Stack, which is an open source code framework for enterprises to build their own chain. And I think depending on the needs, the use case, but also the jurisdiction they're in, they require a different type of chain. Some of them needed to be private, others needed to be public and permission. So we can tailor it completely to the needs of the specific institution and the use case. But also what our stack provides is trustless interoperability. And that I think is really important because there's literally no middleman. They don't have to trust anyone but themselves. And also no chain can be evil. They cannot cheat because they're all ZK powered. So if their transactions are not correct, there's a malicious one, it will not go through. There will not be a ZK proof made for this one. So all these chains are in itself trusted chains, but when they interoperate, the only thing they have to do is basically send a ZK proof together with a message that they want to make this transfer. The other one can read that. They can verify against the ZK proof and accept it, and that's how they will all interoperate. So we're envisioning this network of chains that are all tailor-made depending on what the use case is and what the clientele is, etc., and still for them to seamlessly interoperate. So in terms of distribution as well, you could have a tokenized fund sit on one chain, but still have the users of another chain buy them seamlessly with the best UX because you don't even know that you're jumping from one chain to another. It's just a click like you're swapping on a Uniswap, but better, and have the token on your chain and very securely, never having to trust a middleman. And that, I hope, is what we can keep developing.
You all work at very different organizations that are focused on different chains. Do you see a future where it would be multi-chain and interoperable between them for institutions to kind of weave in and out through each of your ecosystems? If so, what would that look like?
Sure. So yeah, I think like frankly, if you ask anybody, everyone believes in a multi-chain future. So I think inherently you will.
Well, Meltem Demirs was just up here and said she did not believe in
Okay, most people believe in a
four
multi-chain.
or five, so
Four or
maybe,
five,
maybe
four
we're
or
good.
five.
Sure. So I
handful
think
of
like
chains,
inherently you will need interoperability, and obviously there's a lot of projects out there that are kind of focused on that. Maybe like a hot take from my side is that I think that any application or business that reaches true product market fit in the space will want and necessitate its own chain, its own layer 1 blockchain for a lot of reasons, which find me after happy to talk about. But I think we will start seeing kind of these chains, whether it is a crypto native platform reaching true scale and product market fit, or a large Web 2 company kind of coming into the space and building a series of applications. They will want their own layer 1 blockchain. They will be able to kind of fully maintain and build value into that platform, into their token if they have one, and kind of customize and really own their end-to-end blockchain environment. But inherently, that will need to be interoperable with other chains and other assets. And so I think we'll start seeing kind of the proliferation of that. And I mean, frankly, we had Converge today, right? So they're building their own chains. So I think we'll start seeing more of that, and inherently they'll have to be interoperable.
So just curious, who here in the audience thinks the world needs more blockchains? All right, there's 3 people.
I don't mean entire blockchain networks, right? They can be Avalanche L1s, they can be Cosmos chains, but I think inherently we'll see that.
We were slacking about this yesterday, actually.
It's a private conversation. I also want to touch on the regulatory point. I feel like that's been discussed throughout the day and just in conversations in general. The industry has gotten maybe a sense of relief on this front, at least in the US and maybe more broadly in other countries, but we're in America right now, so we'll talk about that. What are the biggest challenges that remain for you to kind of conquer to make sure these institutions feel like they could actually come into this? Because in the beginning, we did discuss, like, hey, there is these regulatory hurdles that are still there.
We need a stablecoin bill. We need something that looked like the FIT bill or whatever replaces that. I think at a start, we need those 2.
Agree. Yeah, same. I think like what we also will need to say, I think, yes, regulation was one thing that was kind of highly cited in terms of like a blocker. So obviously, post-election, a lot of that has started to clear up. I think stablecoin regulation will be really helpful. But I think what we really need to see the tipping point is for a Web 2 company, whether it's a neobank or a wealth tech platform, one of these that is not necessarily like a traditional incumbent bank, but maybe a challenger that really starts to adopt the tech and start really kind of gearing up its business, building a moat. And that's when I think others will start to have FOMO and kind of come in and really start to like ramp things up on their side.
Haven't we seen that a bit with JP Morgan, though?
JP Morgan?
Yeah.
I don't think we've seen.
And Onyx, like the blockchain. The it girl is not here. It's funny you use the words tipping point, because that was going to be my last question, is like, what would be the tipping point where, you know, we feel like it's fully adopted and tokenization from institutions is like fully implemented? What would that look like?
Well, you just mentioned JP Morgan. I think on the next panel is Robbie Mitchnick from BlackRock. And of course, we're here at the Securitized Wormhole event, and BlackRock Biddle, surpassed $1 billion AUM, and Larry Fink gets up and he talks very positively about this space. And so clearly they have executive sponsorship, to do what they do in Robbie's group, in the digital assets group. At JP Morgan, Jamie Dimon, he gets up on, stage and he does not speak positively about this space. And so I think when you get Jamie Dimon up here saying how much he loves blockchain, how much he loves crypto, that's the tipping point.
Well, he's coming up. Surprise guest.
Awesome. Great. There's room.
Amazing.
Maybe also once we stop calling it TradFi and just finance, that's what we'll know.
Fi. It's cleaner.
Final thing. What do you all want to see happen by end of 2025 in regards to everything we talked about? What would make you feel like this year was a success? Pearl?
Not by 25. I'm thinking much more longer term.
We got to go near
Like,
term.
yeah, I would love that it all happens this year, but people are like, yeah, now it will all happen this year. It will take a bit longer. It will take a while, I'm sure. But like ideally, in an ideal world, I would love to see a whole tokenized economy where we wake up, have a workout app, do a workout, you get tokens for that, but you're also an investor in the same workout company. So, oh, wait a minute, you get your shares just went up in value. You go to get a coffee, pay with a stable coin, get your loyalty rewards, and you're all in your wallet. And then you see how your AI agents just did today, and oh, you made so much money. I'll put it in a risky tokenized fund. That would be, of course, the ultimate goal. And then in that way, you have companies accessing new capital because you have all these users that then actually become a shareholder. And also for the people, you have access to new assets that are now not so easily accessible to you. And that is what I hope we will go towards. But that will not happen this year, of course.
Yeah, I don't think that's by the end of this
Well,
year.
I agree, and I want to see Pearl's vision in reality, and I think you get there with founders, applications, and tokens. So we need more butts in these seats. We need more people who have a vision to be, financing and building the applications that they want to see in the world, and more tokens. All the tokens, bring them on chain.
Yeah, I would just say kind of what I said earlier. I think we'll see this year some of these like Web 2 challengers really start to adopt, especially stablecoins to start, and then potentially kind of go out, maybe even see tokenized equities this year as well. But I think we're going to be working toward that tipping point from kind of like a Web 2 adoption standpoint, which I think will really help to kind of open the floodgates in terms of kind of broader off-chain adoption as well.
Yeah. Well, Pearl, Nick, Morgan, thank you for sharing your insights, and thank you to everyone for listening in.